Okay, this is part two, and in part two, we're going to look at direct materials, direct labor, factory overhead, and identification of cost systems and primary and conversion costs. And that's kind of going to wrap up the new terminology that we're going to be dealing with. Main thing we're looking at here is direct materials, and direct materials are anything that are directly traceable to a product that you're doing. An example here is steel used in the frame of a mountain bike. Now, if they were using glue and that glue were, a dab here, a dab there, and no really precise measurement of how much glue was used, that would be an indirect cost, which is our goes to, direct. Hold on, that would go to factory overhead, but I'll get to that in a minute. The other direct cost we have is labor, and those are wages and salaries that are directly related to the product. People who put those products together, who handle the product, not the janitors, not the lead people. A lot of times, lead people are going to become indirect, as are the supervisors or the plant manager per se. Those become indirect, and those all end up being thrown into factory overhead. So you end up with having indirect labor, indirect material. You have utility costs that could be thrown in there. You've got supervisory costs that could be thrown in there. You have setup costs that could be thrown in there as overhead also. In some cases, that depends on how it's defined by the company or the department itself. So that is, direct materials, direct labor, and factory overhead make up the cost of products, product cost. So the next thing you look at here is we try to put this all together for you because I've been talking about fixed and variable, direct and indirect, and product and period. So as you look down through here, you can see bicycle tires and wheels. They're a variable, right? The more I make, the more they cost. I mean, the higher the price gets. It is a direct material, right? And it's a product cost. So you can kind of see how these are defined across the line. Same thing with wages. For the assembly worker, it goes up. If we make more, we usually have it's going to go up. It's a direct cost, it's a product cost. So advertising is usually fixed unless it's designated otherwise. And that's an indirect cost because it's not really directly related to the making of the product. It's made directly related to the selling, but not the making. And that becomes a period cost. So you have a product production manager's salary. That's usually fixed because it's salary. Salary means fixed. It's an indirect cost. It's a product cost because they're working to get that product out the door. They don't directly touch it. Office depreciation is usually fixed. It's indirect because it's in the office or administration. It's a period cost. Factory depreciation, straight line, and this office would be straight line also, is fixed. It's indirect, but it's a product cost because that's in the factory. Okay, here you've got the oil and grease applied to the gears and chains. That's a variable, but I don't know exactly how much is applied. So we're going to call that an indirect, and it's a product cost. And then you have sales commission, which is a selling cost, which is a variable because a commission, you get so much per product that you've sold. It's an indirect, right? But it's a period cost. So you can kind of see how this all fluctuates in the process of doing these. And we'll play with these a little bit further as we get into the course. And that brings us to our final definitions here, our final categorization. Manufacturing costs are sometimes combined as prime costs or conversion costs. Interesting thing is direct labor is in both of them. Direct labor is a prime cost when it's combined with a direct material, and it's a conversion cost because you're using it to convert the data or the material into the product, as is manufacturing overhead. So that's called conversion. And we'll kind of play with that one back and forth too. So that kind of wraps up the terminology. Now next we're going to look at balance sheets and income statements. So hang in there. This is part 2.